have a question for all of you. Do you think the United States is headed for a recession? And if so, what is that going to mean for all of our financial well-being? We are joined by Goldstone Financial Group's Phillip Shaw to get some answers. Good morning to you, Phillip. Good to see you. Big question looming. Are we going into a recession? The Fed is trying to make some move to prevent that. The president is saying he's going to try to do some things. But how do we know that we're even nearing this? What are the signs of a recession?
Thank you for having me. And you know what? It's a really great question to start the day. And, consumer sentiment is, around 80% of people, that we ask in the community believe that we are headed for a recession, whereas it's only about 40% of economists actually believe we're headed for a recession. A lot of things that aren't helping that fact right now is, consumer price index that we just had a new print for just a couple of days ago at 8.6%, which is the highest we've seen in decades. We have the Fed increasing interest rates, which is not helping, too much in the short term. They are walking a bit of a tightrope here. So on one end, they're trying to tamp down inflation by raising those interest rates. But at the same time, by raising the rates, they are also running the risk that they push the economy into recession as well.
Okay, so as we sit and watch and wait to see what's going to happen, what do we need to do as consumers to prepare ourselves if, in fact, this is going to happen?
Well, I always recommend we stick towards that long-term plan, right? Keep your long-term goals in mind and keep your financial plan in mind. I heard a really great one recently, which was that everybody has a long-term plan until they have short-term pain. My recommendation in times like this is that, our clients, the people we're working with, the people I talk to, that you build your financial fortress, we call it. So it's making sure that we've paid off any kind of high interest debt, that we're building up that savings account, that emergency fund, that we're not taking too much risk in our investments, and that we're not, unnecessarily spending. There are things that typically we have in our, maybe monthly budget. It might be a couple of extra streaming subscriptions. It might be an extra vacation right now. And especially if you're not somebody who's short of that, kind of financial fortress for yourself, it can be a really great opportunity to do that.
Okay, when you say diversify your investments, give us some examples. People are watching, we keep doing these financial stories, trying to get people advice. What are some good areas right now to diversify with?
Well, it's really tough because pretty much every sector of the economy right now, every sector of the market has been negative for the year. So if you are an investor, it's keeping that long-term mindset in mind more than anything else. One of the most dangerous things you can do is try to time the market or try to move around too much and get yourself in trouble, buying in and buying out. My recommendation is we keep towards that long-term strategy. It can be a time, again, if you have shorter term goals, to shore up cash, to shore up some shorter term investments like shorter term bonds, that can be a better investment for you right now if that's a short term goal. Okay. If you're still talking decades in the future towards retirement, keep the long-term mindset.
Long-term mindset. Don't spend money needlessly and try to save as much as you can. Good advice. Phillip Shaw, thank you so much for joining me this morning. Good to have you on.
Thank you. Appreciate it.
You take care.